Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. It is 10 minutes past 1 PM on Friday the 19th of February 2021 and we're going to spend the next few minutes looking at the oil market, specifically the CFD on WTI, which is West Texas Intermediate. Right then, so as always on this channel we're going to start with our basic technical analysis first and our Elliott Wave analysis second, but first let's have a quick rundown of the chart. So we'll just clear the chart here. Okay, so if you're new, we have 4 exponential moving averages on the chart, a 10 in yellow, a 20 in blue, a 60 in orange, and a 250 exponential moving average in green. We have a MACD set with a 10 for the short-term moving average and a 20 for the long-term moving average. We have an RSI set to a 10 close with the green 30 level representing oversold and the red 70 level representing overbought. We also have a volume profile on the right hand side here with a built-in point of control, which is the yellow dashed line here showing the peak of the volume. Right, what can we see here on the weekly time frame? We're on the weekly time frame here, guys. Let's just zoom in. So potential shooting star here, or a potential bearish hammer forming. It is still only just gone 1 o'clock, so this body of this candle could finish green and fill out. It could finish red. We'll wait and see, but potentially bearish candle here with a long wick to the upside, maybe set up for a reversal or at least a short-term correction. That's a possibility. We have the MACD still showing the short-term moving average trending higher over the long term since bottoming at 0. Obviously, the oil traded all the way down to last year. RSI trending higher, series of high lows, higher highs and higher lows. We're now into extremely overbought conditions. Of a weekly time frame, we're up at 82.28. So a pullback in the short term, at least, probably on the cards soon. We can try and figure out when we look at our Elliott Wave count in a bit. So fundamentally bullish since the low. We are above the 250-day exponential moving average now, which is the green line here. We spent 3 weeks below it, causing very strong resistance. Obviously all this chop back here we were trading into as well, with a major moving average here which had been flat for a specific a very long amount of time, producing pretty significant resistance. Finally popped through that, 2 bullish candles for 2 weeks into all this chop here, right around the point of control in the volume profile. If we're going to get pushed back down, it's going to be in amongst all this. Okay, above the 10, 20 and 60 exponential moving averages, all starting to head up and cross over the 250 with the price above. This is a golden cross forming here once we get this 20 up here as well. So that's positive. We'll have to see the price above it when it occurs. There's no guarantee though, but it's a basically bullish sign. Right, so let's have a look at things of a day time frame. So wicked through the 10 exponential moving average today. Have bounced back up above it, finding support in the short term. It may hold, it may not. The 20 has been very strong support, as you can see, tested here, tested here, tested here, since moving back above out of this 3-wave correction here. So this is the start of a new impulse wave, and this was a corrective wave, 3-wave structure here you can see clearly. So 5-wave structure, 3-wave structure, 5-wave structure. So once that new impulse wave began, we found constant support at the 20. So a test of the 20 again could be another wave down before another wave up to flesh out the 5 waves here, or it could be the sign if we get that weekly candle on the reversal and a weekly bearish candle next week engulfing the previous week. I'll just show you what I mean by that. So if we got a big shooting star here, and then we got a big red candle next week gobbling up all of the previous week's candle, that'd be a nice bearish reversal candlestick pattern. So let's just come back down to the daily time frame. Trading above the 10, trading above the 20, the 60 and 250, but quite a gap from that 250 now. A retest, if we were to correct, of that 250 would bring us basically down into all this noise here, all this sideways movement, which would be quite typical if we were to have a significant correction. Cooling off from the RSI, not back into neutral territory yet between the 40 and 60, but still elevated, but cooling off a little bit. MACD is showing this most recent bullish wave here, which is from this sideways 3-wave correction into the last 5-wave move here. We had that nice expansion of the short-term and long-term moving average, just as we did here in this wave up here, as you can see on the MACD, and the corrective phase here, and then this initial first wave move up through here, and then the corrective phase here. So supporting the MACD is supporting the potential for a short-term correction. We've got the short-term moving average getting very close to crossing over the longer-term moving average. This is normally a sign. We've got darker green bars in the histogram as bullish momentum starts to die down. RSI is moving back below overbought. Bearish candlestick pattern forming. So yeah, it's all pointing towards a correction. Could be just a day or two, could be these couple of days before we bounce again, but it's all pointing in that direction. We'll have to wait and see how things develop. So on that note, let's bring up our Elliott Wave count and do our Elliott Wave analysis now. We're going to go full screen. So first thing I want to point out is the labeling here has a cycle wave 1 and a cycle wave 2 on it, suggesting that we are in a big cycle wave 3. I believe that because I believe we're in a new bull market, a new cyclical bull market, which began last year in April of 2020, when we hit zero. Now we come down from $150 a barrel in 2008 to zero in 2020. So zero is good enough for me to call it a bottom. That's good enough for Tom. Zero is good enough to start again. So on that basis, rather than suggesting that we're in an upward correction before another move to what, zero again? Okay, so I'm suggesting that we're in a new cyclical bull market and we're going higher. Now I know that might be at odds with may appear to be at odds with some of my views regarding the stock market and other assets, but we have to remember oil price has been moving down the whole time since 2008, right? The whole time down to zero. What has the stock market been doing the whole time since 2008? It's been moving up, right? There's been an inverse correlation between oil price and the stock market the whole time. I'm not saying there has to be a correlation there at all. I'm just saying if there was one, it'd be a negative one. Alright, so maybe a big reversal in oil, even though we've been moving up at the same time as the market. We all know why that is, though. Perhaps it's a sign of things to come. I still feel the main driver for oil price in the future, just touching on fundamentals for a minute, I know I don't like doing that, but just touching on it for a minute, long term should be inflation. That seems to make the most sense. So anyway, that's enough of that nonsense. Let's get into the Elliott wave count here. So we have 5 primary waves up. 1, 2, 3, 4, 5, ending diagonal in the 5th, pointing out cycle wave 1, A, B, C, cycle wave 2. And if we just come down and have a look at the 2 hour here to see our most recent wave up from the bottom of that cycle wave 2. Let's find our way back here for a moment. I've got the chart on auto, so I can't move the sodding thing. There we go. Right then. So we get that nice 1 2 1 2 1 2 1 2 start, which is what we like to see as we start a brand new wave up after a major correction. So new cycle wave, we get all our wave degrees in one go. And so then we go 1 2 1 2 1 2 1 2 into the 3 4 minuet, 3 4 minute, 3 4 minor, 3 4 intermediate, 5 intermediate here, looking for our 1. So I've got us incomplete at the moment. I've got one more move up. Now I might be wrong. We might have 5 waves down in an impulse here because we do have a 5 wave structure. So that could be a move down to come. But I also think that we've got one last push up. Would be one little last push up to find this intermediate wave 5 on the primary 1 degree. And that would be our wave 1. Primary wave 1 of cycle wave 3 of this massive new wave 3, which we're in, and it's got a long way to run. So let me just show you why I think that for a minute. Let's zoom in nice and close on this correction here. The issue I've got with calling this the 5, this is a minor 5, sorry. The issue I've got with calling this the 3, I've got this mislabeled. That 5 needs to go over here. There we go. The reason I'm not calling this a 5 is because of this really odd structure. Well, it's not odd. It's a 3-way swing here. You got A, B, C, A, B, C. There's no clear impulse in here. So I can't label this 1, 2, 3, 4 because this is a lower low than this low. But I could label this, if I come down to a smaller time frame, 1, 2, 3, 4, 5, right? 3 waves into a B, 1, 2, 3, 4, 5. If I come down a smaller time frame, so I can label this as a zigzag. Okay, and then I've got a zigzag here, A, B, C. So I've got a 3 wave correction here into my A. I've got a 3 wave correction here into my B, and then I've got what looks like a very clear 5 wave structure forming. So I can move this 4 and this 3 and this 4 over to here, like so, with the 4 still forming, 5 to come down to find the 4, to find the C of the 4 here, but you can count on the smaller time frame. You can find the 3-4 in here as well, and say that this is potentially the 5 of the C of the 4, and then we'd be starting that 5-wave move up to complete the 5th. That's my preference. It could have started like this, okay, or we could have that one more move down to finish that 5th wave of an impulse wave down in the C. So 1, 2, 3, 4, 5, and then we get this move up into the 5th and final wave of our primary wave 1, and then much more impressive correction to come after that. Big wave 2 pivot on the way. If I'm right, big wave 2 pivot on the way. Brilliant opportunity to get back in and ride the free of the free of the free, which is what every trader wants to do. You want to get in on that 3rd wave of the 3rd wave, and that's where the most of the price action is going to take place. So if that's where, if I'm right on that, that's what we want to be keeping an eye on going forward now. Like I said, it is possible to put the 5 in here and try and figure out some kind of ending diagonal in this pattern. I don't like it. I prefer this as a flat, A, B, C into a 4. So 5th of a 5th of a 1 to come, and then we're done. And then we can look forward to that big sell-off, 3 waves down into a wave 2, giving us that magic pivot. So let's assume we get our target for a moment. Let's just, okay, now I really am jumping the gun here now, guys, because we haven't seen it complete yet. So this is all complete BS until we see it complete. It's just theoretical. This is all theoretical. We're dealing with probabilities when we're dealing with Elliott Wave after all. All technical analysis is built on it. So let's just assume for a minute that we get our target. And you come up here to complete a 1, which should be right around these tops as well, right around the 50% retracement of the high from 2008. It just happens to coincide with, I forgot to mention that earlier, so a significant area of resistance ahead. If we were to get it, I'm measuring from the wrong place, you twerp. There we go, from this wave 2, because we've already done the cycle wave 1, cycle wave 2, so this is primary 1. Primary 2, we're looking for the run up in primary 1. So look at where the 61.8 is positioned, guys. I'll just show you here. The 61.8, if I just put a line across the chart, is right here. Okay, that's coming right down into the territory of testing this previous wave 1. Okay, so you'd be getting a primary 2 retreat, primary 2 coming back to test the top of the cycle wave 1 potential. You've also got the 50. If we look here, 38 and 50 region, this is testing all of these previous lows that we saw here as long-term support, which became resistance, which we broke through. Volume profile, if we can just get all the move up from the low here, see what we can see, because we're trying to look at a new cyclical bull market on its own, aren't we? We don't want to necessarily pay too much attention to previous price. There's a chunk, a node in the volume here, there's a big gap here. Nothing. You got these 2 areas, they stick out a little bit, I guess. There's nothing screaming at me there to suggest that we find support. We're already at the major volume node currently because of all this noise here, so we'll have to keep an eye on the count, see how it completes. If we get a completion up here into a 1, we can then start looking at the price action on the way down, and if we start to see 5 wave impulse form, then we'd be looking for 535. So we'd be looking for move down in 5 waves, and move up in 3 waves, and then move down in 5 waves, and then we'd be going bump, 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 starting a wave 1 of the 3. Alright, I think I'm in danger of waffling if I carry on now, guys. That's it for oil, basically. I think we've got one last push up here, but you've got to keep an eye on this, because we are showing a bit of a reversal sign on the weekly candle at the moment. If we close bearishly today on the Friday, this count could be wrong and we may have already peaked, and we could be just putting in the wave 1, 2, 3, 4, 5 into a 1 down, 2 to come up before moving down lower. So not my preference. My preference is for one more move up to make this into a flat pattern. But anyway, that's it, guys. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like button. Let us know what you think in the comment section below if you want to. Always feel free to share my videos, and take care, guys. I'll try and get back to you with another video, but that might be it for the weekend now. So if I don't see you till the next weekend, take care. All the best for the week ahead. Bye bye. Oh, well, weekend, I should say. Have a good one.